Good afternoon, guys. Am I audible?
Yes, sir.
Okay, let us start then. So today we are going to do very important topic, input tax credit. Okay, we'll wait for a couple of minutes, then we will start. Only half of the batch has come. So 1 or 2 minutes, we'll start in a couple of minutes. Huh? Okay, and there is some confusion relating to time of supply for goods. Okay, we'll clear that also, because those who are referring to bare act, okay, it's the same thing, okay, but just the bare act, how to interpret the bare act, that I'll tell you. Huh? Okay, the interpretation of bare act is a little bit different, but the concept is same. What I have taught, the concept is same. So that also we'll do today at the end. Just remind me at the end, before we finish off today's lecture, we'll just clarify on the time of supply thing. Okay. So today we are going to study input tax credit. Very important. You can expect numericals up to 10 marks, up to 10 to 12 marks. 10 to 12 marks on this. Okay, this is like the what I can say, like a concept which will incorporate many things from your GST chapters. So a lot of concepts from the GST chapter will be incorporated under input tax credit. So I'll tell you what is input tax credit. I'll tell you the definitions. Okay, and then we'll also see how to do the numericals. We'll also see that. Okay. All right, then let us start. So we have discussed about this a lot. At least 2-3 times we have discussed about input tax credit. Okay, so today we are going to see it in detail. So you guys tell me. You guys tell me. Let us say I have written input tax. I have written output tax. Okay, and then I want, let us say input tax is 45,000. Okay, output tax is 54,000, and then I want to know what is the concept of input tax credit. Input tax credit. So first we'll take a simple example, and then we'll start taking our normal examples. So tell me, what is the concept of input tax? What is an input tax, or input GST, also known as input GST?
The tax that we pay to purchase goods.
Correct. The tax that we pay to our suppliers. The tax or GST. I'll not write tax. I'll write GST. The GST that we pay to our suppliers is my input tax or input GST. Okay. Output tax or output GST. Output GST is what? It is the GST. You guys tell me, what is it?
The GST that we collect when we say sell goods.
GST collected from our customers. Output tax is nothing but the GST collected from our customers. Okay. And input tax credit means what? I'm collecting 54,000 rupees output tax, and I was supposed to pay this 54,000 to the government. But how much I'll pay to the government? Tax paid to the government will be how much?
9,000.
Correct. 54 minus 45. Only 9,000 taxes paid to the government. So in short, I am getting what? I am getting 45,000 ka input tax credit. I am getting 45,000 worth input tax rate. I am allowed to deduct this input GST from the output GST that I collect. So I collect 54,000 from my customers, but I pay only 9,000 to the government. Okay. So this is the whole concept of input tax credit. This example we have taken a lot of times now. So I hope you guys are clear with ITC. This is called as ITC, and this is called as input tax credit, also called as ITC. Okay. So now let me elaborate the example. Okay. a bit in detail. Huh? Mr. A, then we'll see the conditions. Mr. A is a manufacturer, of, let us say, benches, right? And he has purchased the following. He has purchased, number one, inputs, that is raw material. So for benches, the raw material is wood, correct? Raw material amounting to 1 lakh at 18% GST. Number two, he has also purchased input services of carpenters, okay, amounting to 50,000, okay, at, let us say, 14% GST. I am taking random GST rates, huh? And he has also purchased capital goods. He's also purchased plant and machinery. So I'll write machinery. He's also purchased machinery, capital goods, okay, for production of benches, right? Of, let us say, rupees 10 lakhs, or let us say rupees 5 lakhs at 18% GST, So these are the purchases that Mr. A has made. These are the purchases that Mr. A has made. He has purchased input, he has taken input services, and he has also purchased capital goods, and he has paid GST on all of them, correct? He has paid GST on all of them. Now, with all these inputs and capital goods, Mr. A has manufactured benches worth, let us say, 800,000, okay, and GST on such output is at, let us say, 20%. I'm taking random GST rates, hypothetical GST rates. Okay, so required, now you guys will tell me, required, number one, what is the output GST? Okay, number two, what is the input GST? Okay, and number three, how much will Mr. A pay to the government after claiming, you have to claim ITC after claiming input tax credit. Okay, simple example. This is a simple example that I have written. So what is the output GST collected? How much is the output GST collected?
So is this the 5 lakh which is there is inclusive of GST, or
nothing
8
is
lakhs
inclusive
amount?
nothing is inclusive of GST. Okay, nothing is inclusive of GST.
It's multiplied by 20%.
So 88 lakh into 20%. 8
1
lakh
lakh
into
60.
20%, 1 lakh 60 is what Mr. A will collect from his customer. Everyone agrees with this? Yes or no?
Yes, sir.
Okay. Now, what is the input GST? Should I take only GST on inputs? Should I take GST on input services? Should I take GST on capital goods? All three, or only input and input service?
All three.
All three. Okay, so whatever is required in the furtherance of business to produce these benches, right? All these three things are required to produce the benches, right? So whatever is required for the furtherance of business, all kind of inputs, all kind of input services, and even capital goods, right? I will take GST on that. So my input GST will be, pay attention, input GST will be 1 lakh into 18%. That is my first input GST, plus 50,000 services into 14% GST I have paid to the laborers, to the carpenters, correct? And plus, to take capital goods, I have taken capital goods worth 5 lakh and into 18% GST. So these three will be my input GST, right? And I'll finally pay to the government only 45,000. I'll pay to the government. I've collected 1,60,000, but I'll get entire GST that I have been paying on inputs, input services, as well as on capital goods. See if this example is clear. Yes or no? Okay, simple example. Okay, so now we have to see what kind of inputs I can get GST on. Okay, what are the conditions to claim ITC? So here in this case, how much ITC has Mr. A claimed? Mr. A has claimed entire ITC, right? Entire input tax of how much was input tax? 1,15,000. He has claimed entire input tax of 1,15,000. He's collecting 1,60,000 from his customer, taking a credit of 1,15,000 on inputs and paying only 45,000 to the government. Okay. So in short, input tax will be all kind of GST. Guys, pay attention now. This is very important. If you guys don't understand anything, you can stop and ask me. Okay. So whatever I am writing is very important now. So input tax will be all kind of GSTs paid on number one, inputs. Inputs means raw materials. Correct. But these inputs should be for furtherance of business. For the furtherance of business. Correct. Number two, input services. Okay. All kind of input services. Correct. Again, should be for furtherance of business. And even capital goods. Entire value, even though capital goods are going to be used for 10 years, 12 years. Okay. Then also entire amount of tax paid on capital goods can be used for my input GST. Okay. So for example, this output was only, let us say, produced in 1 year. And the life of capital goods, is 5 years. Okay. And this production, this output was produced in 1 year. Still, I'll get entire input GST paid on capital goods. Don't do then 5 lakh into 18% into 1/5. Like depreciation, you don't need to do like depreciation. You can claim the entire input tax paid on capital goods in the first year itself. No problem. You don't need to take proportionate over here. So this is a bit different from depreciation. Okay. In depreciation, what do you take? You don't take the entire capital goods value. You only take the depreciated value, right? So in case of depreciation, you would have taken 5 lakh divided by 5 years. Only 1 lakh you would have taken. But in this case, I'll take entire 5 lakh into 18%. Okay. And here I am using only GST, which is paid. Okay. Not other taxes. Only GSTs, not other taxes. Not other taxes. So for example, while purchasing inputs, you paid 1 lakh into 18% GST and 2% octroi. Okay. Then octroi, the tax on octroi, the octroi tax will not be included under input tax. It is not included under input tax. Or let us say you imported inputs, you imported raw material, and on import you paid BCD plus GST. Then, sorry, BCD plus IGST, right? On imports we pay two taxes, na? When I import anything, I'll pay BCD plus IGST. So here I'll only take IGST, all kind of GSTs, all kind of GSTs, CGST, SGST, UTGST, and IGST. Okay, all kind of GSTs I can take as my input tax credit, but not other taxes. See if you understood till here.
So if it is import, we will take only IGST, right?
Correct. So let us say these machinery, this capital goods, this machinery was imported 5 lakh import, correct? 10% BCD and 18% IGST. Then I'll take what? I'll take only IGST. I'll not take BCD. So input tax is only of GST paid and not other taxes. Got it? All right. So now let us see conditions. Now this is the basic concept of ITC, guys. ITC is a huge concept, huge chapter. You have to remember certain things in input tax credit. Okay, we'll be solving numericals. 10 to 12 marks for numericals also will solve, which will include all the concepts. Okay. So to claim ITC, government is allowing you to deduct 1,15,000, right? So this is called as claiming ITC. You are collecting 1,60,000 from your customers and you are only paying 45,000 tax to the government, and you are claiming entire ITC of 1,15,000. So there are certain conditions for that. If all conditions are satisfied, then only ITC can be claimed. Conditions that need to be satisfied. There are a lot of conditions. 11 conditions are there. Okay, conditions that need to be satisfied. If the person wants to claim input tax credit. Let us start then. Now everyone is clear with what is the concept of ITC? Is there any confusion, guys? What happened today? You guys are not responsive today. What is it? No problem, not till here, no problem.
No, sir.
Okay, let us start then. First condition, obvious condition. The person claiming ITC should be what? Should be a registered person. Should be a registered person. Okay, person claiming ITC should be a registered person. Then only you can claim ITC. If you are an unregistered person, then even if you have paid input GST, you cannot claim ITC. You cannot claim ITC. You have to be a registered person. So that is obvious condition. Okay, but still I'll write it. Second condition, the GST, the input tax paid on inputs, comma, input services, comma, capital goods should be for furtherance of business. Okay. For example, the same example of Mr. A. Mr. A is a manufacturer, right? Mr. A is a manufacturer. He has taken raw material as input. Okay. But let us say he has also taken some wood for his for the purpose of making furniture at his house. Okay. So he has taken two types of inputs. He has taken two types of raw material. So raw material for producing benches, 1 lakh, and paid GST at 18%. And he has also purchased raw material, okay, for making furniture at home, furniture at his own place at home, okay, worth, let us say 30,000, and paid GST at 18%. Which GST will he be allowed to be claimed? Will he be allowed to claim?
So the first one.
Only for the first one, only for producing benches, right? So whatever input he is purchasing for personal purpose, okay, or for non-business purpose will not be allowed, even though he is paying GST, right? Here also he is paying input tax. If you purchase something, you pay input tax, right? So here also Mr. A is paying input tax, but he will not get to claim 30,000 to 18%. He will not get to claim that. Is that clear, everyone? Furtherance of business. So any inputs used for non-business purpose, ITC is not allowed. ITC is not allowed. All right. Next. Clear till here? Yes or no?
Yes.
Okay. Third condition is to claim ITC, to claim the actual input tax credit. Okay. The amount should be credited to a specified account called as electronic credit ledger. Okay. Everything is done online nowadays. Okay. All GST payment and all input tax credit will be done online. So to claim ITC, your amount should be credited to electronic credit ledger. Okay. If this is not done, you cannot claim ITC. Huh? If this is not done, you cannot claim the ITC. Okay. So you will have to show this as a proof. Okay. You will have to show this as a proof that whatever input tax I have paid, that amount I am showing it my electronic credit ledger, and then only I'll be able to claim the input tax credit. Number 4, another proof that you have to give is the person claiming ITC should have the tax invoice. You should have the proof that you have paid GST, right? You have paid GST. So that proof is what? That proof is tax invoice. Okay, there's a doubt. What is ECL? ECL is this thing only, na? Electronic credit ledger. That's ECL. Okay, ECL is the electronic credit ledger. And there is one more doubt. Credited meaning the output tax the vendor collected. No. The input tax that you want to claim as input tax credit. Okay. So in this case, Mr. A in this case will credit how much? In our above case, Mr. A will claim 1,15,000 input tax credit, right? So Mr. A has to put this 1,15,000 in electronic credit ledger as input tax. Okay. And when he actually collects 1,60,000, then what will happen? The system will open up his electronic credit ledger. When Mr. A collects 1,60,000 from customers, okay, the electronic credit ledger will be opened, and in that we will see how much input tax is showing, how much eligible input tax. Only the eligible input tax gets shown in electronic credit ledger. What is eligible, that we'll see. Okay, so I'll add a line over here. The electronic credit ledger only shows eligible. Okay, so for example, any input that you have used for personal purpose, that is also input tax, na? That is also input tax, but that is not eligible input tax, right? So electronic credit ledger only shows eligible input tax which can be claimed. If you are understanding all the wordings that I'm using, the doubt is clear. Okay, yes. Next. So the person claiming ITC should have proof that he has paid tax, he or she has paid the tax, correct? So should have tax invoice, or if it is done through book entry, then debit note. Okay, or if it is an import, then bill of supply. So either of the three documents the person should have. Okay, the person should have either of the three documents, either tax invoice, debit note, or bill of supply. Okay, tax invoice is for normal purchases, debit note is for book entries, and bill of supply is for imports. So when you import something, you don't get a tax invoice, you get bill of supply. When you purchase from a trader, you get tax invoice. Okay. And when you exchange things, goods for goods, then you get a debit note. Okay. So I sold Mr. A goods worth rupees 1 lakh, and he also sold goods to me worth rupees 1 lakh. So for that, tax invoice will not be issued. For that, a debit note will be made. Okay. So the person who is claiming ITC, the person who wants to claim ITC should have proof, and that proof can be in form of either tax invoice or debit note or bill of supply. Understand these three different bills, guys?
Yes, sir.
Okay. If none of these is available, if you only have a kacha bill, okay, if you have a normal bill where tax invoice is not there, okay, then you cannot claim ITC. Yeah? You cannot claim ITC. So when your supplier is sending you a bill, right, be sure it is a tax invoice. Be sure what is a tax invoice, again we'll study later on. Okay, because tax invoice has the supplier's GSTIN. Okay, supplier's registration number. Okay, all right. So the person claiming ITC should have proof in the form of these three, either of these three. These four conditions till now. Any doubt, guys? Any doubt till these four conditions?
Sir, I just wanted a clarification regarding the third point for the electronic credit ledger. So every time he gets like the customer gets the amount, the input tax, he has to open a ledger and transfer the amount to that, right?
Correct, correct. So he does not get it now, he pays it now. So in this case, Mr. A, for example, the example that I took, Mr. A purchased wood worth 1 lakh at 18% for producing benches, and he also purchased wood worth 30,000 for producing furniture at home. Now both taxes that he has paid are input taxes now, but eligible input tax is what? Only for the benches. So only that amount, 1 lakh into 18%, only that amount will be credited to electronic credit ledger.
Yeah, okay, understood.
Okay. And when your auditor comes for audit, the auditor will check the electronic credit ledger. The auditor will open the electronic credit ledger and ask why these kind of inputs are still showing in your electronic credit ledger if they are for personal purpose. Okay. And then the auditor will make the registered person take out that from the electronic credit ledger.
Okay, sir.
Okay. Okay. Yes. Next, number 5. Okay. Number 5 is that the inputs/input services or the capital goods on which he wants to claim ITC, okay, should be actually received, and not receivable. Means if the delivery is in the future, okay, if the delivery is in the future, then I have already paid input tax, but still that input tax I cannot claim. Even if it is for the business, I cannot claim that. Okay, so it should be actually received. Okay, so these goods/services should be actually received by the registered person, okay, or the third party on behalf of registered person. Because sometimes what I'll do, I'll directly send the goods to let us say my other factory, or I can send it to some other person to produce it, right? That is also okay, but someone should have actually received the goods. Okay, the goods should not be receivable. The delivery should have been done. Okay, it should not happen that I have paid the input tax but delivery is yet to be made. I have purchased the goods, I have made the payment, I have made the payment of input tax also, okay, and delivery is still pending. If that is the case, even though it is eligible input tax, you cannot claim that in your credit. You can claim it only when goods are actually going to be delivered. See if this is clear till here.
So what do you say about the third party if he
Okay.
takes on behalf?
Example, I'm a manufacturer, okay? I'm a manufacturer and 3 processes happen in my factory. 3 processes happen in my factory. Okay. And one process, I do it in my friend's factory. In my friend's factory. Okay. So now I have purchased wood worth 100,000. Okay. 80,000 has been delivered to me, and 20,000 has been delivered to my friend. Okay. And that friend, what is he going to do? He is going to complete the job and give the goods to me, right? Give the goods back to me. Okay. So now I have paid 100,000 into 18% GST I have paid. Can I claim the entire GST as input tax? Yes or no? Yes, correct. We can claim because 80,000 is delivered to me for the furtherance of my business. 20,000 has not been delivered to me. It is delivered to some other person. So let us call that other person as a job worker. There is a specific term in indirect taxes for that. Let us call that other person as job worker. Okay, that job worker is doing the processing for me only, but in some other factory, right? So this 20,000 has been delivered, but not to me, to my job worker. That's okay. That job worker is again working for the furtherance of my business only, right? So I can claim input GST on this entire 1 lakh into 18%. Understood this example? Okay, there is a doubt. So, sir, to claim input tax, it is not necessary that the payment with GST should have been made. That's the next condition. The actual payment also has to be made. Actual payment of GST should also have to be made. So payment also has to be made and delivery of the goods also has to be received. I'll come to that condition. Okay. Can you explain debit note, please? Okay, I'll explain debit note also. So this third party doubt is clear now. Third party, that is, instead of calling third party, we'll use the technical name as job worker. Okay, next. So before going to the next thing, let us say debit note. So example, Mr. A purchased goods worth 1 lakh from Indian supplier. What kind of a bill will Indian supplier give? Indian supplier will give tax invoice, na? Indian supplier will give tax invoice. Mr. A purchased goods, or let us say instead of purchased goods, let us say Mr. A imported goods worth 1 lakh from Chinese supplier. What will the Chinese supplier give? Bill of supply. Okay. Now, Mr. A exchanged goods for services worth 50,000 with Mr. B, of India, correct? So Mr. B provided services, Mr. A provided services of 50,000, and instead of paying Mr. A 50,000, what did Mr. B do? Mr. B supplied raw material. Okay, so Mr. A gave some services worth 50,000 and Mr. B said, I'll not pay you in cash. Okay, you are a producer of benches, right? So instead of paying you in cash, what I'll do? I'll just give you wood worth rupees 50,000. Okay, so in that case, Mr. B is a supplier. What will Mr. B issue? In this case, Mr. B issues
Debit note.
right. Mr. B issues the debit note. Okay. Debit note also will have tax, right? Debit note will also have input GST. That input GST also you can claim. You can claim that input GST also in your books of accounts. Understood now? Point number 4. Okay. Yes.
So, so I have a doubt in third one. So basically, input tax that you want to claim will be credited to the ECL.
Correct.
And how is ECL verified? Like, how do we differentiate between the personal and the?
Okay. So that is up to the auditor. Now, what will the auditor do then? If government says that you have to only claim the taxes which are for furtherance of business, okay, government cannot check it. So for example, the example of home furniture and benches I've taken, na, furniture and benches, right? I've taken. So I'm getting this wood, getting this raw material from a same supplier, material from same supplier, correct, under same invoice, okay. So 1 lakh plus 50,000, okay. So the supplier is giving me a single tax invoice 1,50,000 and GST at 18%. GST at 18%. Okay. It is up to the auditor of Mr. A to check whether this entire 1,50,000 has been used for furtherance of business, which is frankly speaking a bit difficult. Okay, that's the loophole in the system. You cannot know now how much wood he's using in business and how much wood he's using at home. You cannot know that.
Yes, sir.
Correct. So in real life, people do that. People claim input GST paid on personal things also they can claim. So for example, I purchase a phone of 1 lakh and I pay GST at 18%. That entire phone I'm using for personal purpose. But I can claim that I'm making all my customer calls from that phone, right? So this is for my furtherance of my business and I can claim input GST. Okay, government cannot say anything.
So can't we verify it from the tax invoice?
No, because the supplier does not know now where you are going to use this material.
Okay, sir.
Correct. So people do that. Business people will do this. That what they will do, they will purchase personal things. Okay, they will use it for personal purposes, right? And they will not show it. They will not show it. But if they show it, then they cannot claim the input tax. So do you think people show personal things like that? No, no.
They may, sir. Don't know.
Okay. Next doubt is, can you please explain the 5th point once more? Okay. So the 5th point is that two processes. Let us say my benches production, the production of my benches, okay, needs 3 types of process. Okay. Two processes are done in my factory. Okay, for the same benches, for the same benches, I need 3 types of processes. 2 processes are done in my factory, and 1 process cannot be done in my factory. Right? So what I do? I outsource with someone else. Okay, I outsource it with someone else. I get it done from outside. So that is called as getting it done from a job worker. Understood this? Okay. So now I have purchased wood worth rupees 1 lakh. I have purchased wood worth rupees 1 lakh. 80,000 has been delivered to my factory. Okay. And 20,000 has been delivered to my job worker. Right? Now what does point number 5 says? That the input services or capital goods should be actually received, right? So 80,000 I have actually received, so I can claim ITC on that. 20,000 I have not received, but can I still claim ITC on that?
Yes.
Yes. Why? Because I have not received it, but it has been received by a third person on my behalf, right? It has been received by my job worker, and that 20,000, this 20,000 is going to be used for my furtherance of business, right? Okay, so I can claim ITC on both material received by me or material received by a job worker, okay, on behalf of me. Okay, the doubt is, can this third person act as an agent? Yes, yes. If the goods are received by the agent, that is also okay. That's why I have specifically written third party. Example is job worker. I have specifically written third party, and the example is job worker. Okay, all doubts clear now till point number 5, condition number 5. Any other doubt till in the first 5 conditions?
No, sir.
Okay, chalo, next. Still many conditions are left. Let us see. Because see, government is giving you benefit of paying less taxes, right? You are collecting 1,60,000 in our example. You are collecting 1,60,000 tax from the customers. You are only paying 45,000 to the government. So government is giving you a benefit of 1,15,000. So government is very strict about these conditions. Now guys, pay attention. If these conditions are not satisfied, pay attention. If these conditions are not satisfied and you still take input tax credit, government will charge you interest at 18%. Government will charge you interest at 18%. 18% is a significant amount. So if you are wrong in taking ITC, or if you are caught in taking wrong ITC, government will charge you interest at 18%, and a separate case will be lodged against you. So that's why your auditor also needs to be very strict about checking ITC.
Sir, how will the government check? Like there are so many businesses, so how will they come to know?
That's why what happens. So for example, Mr. let us say Mr. Suresh is the supplier, okay, and Mr. Ramesh is the buyer, right? So when the transaction happens, what happens? Mr. Suresh also records it in GST portal, okay, and Mr. Ramesh also records it in GST portal online, right? And then when they file their GST returns, okay, these two amounts should match. If these two amounts do not match, okay, a notice will be sent to both Suresh and Ramesh. Now, if Suresh is ethical person, Ramesh is not an ethical person, what will happen? Suresh will say, I have shown it properly, you have not shown it properly, so you get it corrected. Otherwise I'll not do business with you from the next time. Okay, so government cannot check it. Government has given that responsibility to the supplier and buyer separately. But government says, if so, let us say Ramesh has paid tax of 1,10,000, okay, and Suresh is showing tax of only 1,08,000. Okay, then both their returns will be stuck. They cannot file their returns. Okay, government will not accept, the system itself will not accept. Okay, and either both of them have to show at 1,08,000 or both of them will have to show at 1,10,000. Understand how the cross checking is done?
This is why both of them have to be registered.
Both of them have to be registered. Only registered person can do this ITC. Na? First condition, person claiming ITC should be a registered person.
Right.
All right. So next, first 5 conditions are done now. Let us go to the next one now. Next condition is that the government says you cannot claim ITC anytime. Okay. One more condition is remaining before we go to that. That the input tax should be actually paid to the supplier. Now see, sometimes this can happen. The supplier has what has happened? The supplier has issued tax invoice of, let us say, 1 lakh at 18% GST. 18% GST. Then supplier has also given the delivery of the goods. Okay, this has happened in the month of May. This has also happened in the month of May. Okay, and the payment is not yet made. The payment is not yet made by the registered person. Okay, so now condition number 4 has been done. Condition number 5 has been done. Tax invoice, proper document has been issued. Tax invoice has been issued. Supplier has also given the delivery of the goods. Okay, but from our side, payment is not yet made. Okay, so I cannot claim ITC. I cannot say I have the tax invoice, I have the proof. Okay, I have the actual goods, so I want to claim ITC. That is not allowed. You should have actually made the payment to the registered person. So let us say you make the payment in July. You can claim ITC only in July. You cannot claim ITC in May. So you'll have to wait 2 months to claim ITC then. See if 6th condition is understood. So just having a tax invoice and having the actual possession of goods does not mean you can claim ITC. Yeah? Your actual payment has to be made. Okay, doubt is supplier can claim. Why will supplier claim? For the supplier it is output GST, no? For the supplier it's output GST, and I'll show output GST only when I receive it, na? Because if I show output GST, I'll have to pay to the government. Understood, Alina? For the supplier, it's the output GST, na? So supplier will show output GST only when he has received the money. Otherwise, government will say you are collecting output GST and you are not paying it to us. Right? So supplier will only show when the actual payment has been received from the customer. Okay. Okay, done. 6th condition is done. So see, all these conditions have to be simultaneously satisfied. All these conditions have to be simultaneously satisfied. What if the same thing, na? What if the supplier is not registered? If you are not a registered supplier, can you collect GST? No. And there will be no concept of ITC then. There will be no concept of ITC.
So, like, what if the one that we are buying from?
So that person only, na? If I am buying from a person and if that person is not registered under GST, can that person collect GST from me? Only,
yeah, right.
Only the person who is registered can collect GST. Okay, only the person who is registered can claim GST. Can collect GST. Okay, and only the person who is registered can claim ITC. So this entire ITC cannot work if one of the person is unregistered. It cannot work then. It cannot work. All right, next. 7th point. Now this is also important point. If the goods or services are received in lots or installments, okay, then ITC can be claimed only after receiving the last lot or installment. Okay, you cannot claim ITC in between then. So for example, you are taking services and you are being offered services in 3 parts. First part of service is in month of May, second part of the service is in month of June, and third part of the service is in the month of July. Okay, invoice has already been given to you. You have already made the payment also. Still, you can claim ITC only after the last part of the goods or services has been actually received. only after the third installment has been received, then only you can claim entire ITC. Entire ITC. You cannot claim partial ITC. Huh? Okay, ITC cannot claimed in installments. ITC cannot be claimed in installments. You will say, I have received the first installment. I have paid for the first installment. Let me collect ITC. Let me claim ITC for the first installment. Not allowed. ITC can be claimed only after entire lot or entire installment has been done. ITC cannot be claimed in installments. This is an amendment. This is a new rule they have put in. Okay. See if this is clear. Is this clear or not?
Yes, sir.
Okay. Now in the sixth point also they have made an amendment. Input tax should be actually paid to the supplier. Okay. And this tax has to be paid within 180 days of issue of invoice. So this is the next condition, but I am writing it in the sixth condition only. Okay. This should have been condition number 8, but I am writing it in the sixth condition only. The tax, the input tax should be paid within 180 days of issue of invoice. If you do not pay it, if you do not make the payment within 180 days and you have claimed ITC, government will levy 18% ka interest. Government will say you are not following the condition, and government will levy 18% interest on the ITC claimed. Okay, so I'm writing it over here. Only in sixth condition I have added this. You also add this part. You also add this part. Input tax should be actually paid to the supplier, and this tax has to be paid within 180 days of issue of invoice. Otherwise 18% interest. Write that also. Otherwise 18% interest. And that interest you will have to pay to your government. Not just supplier will also charge different penalty. Supplier will also charge different penalty, and we will also have to pay interest to the government. So I have to make 2 interest payments, one to the supplier for late payment and one to the government for wrongly claiming ITC, for wrongly claiming the ITC. All right, no problem. Till here. Go ahead.
What if the goods that have been received are in installments and they are like for a long period of time, like
doesn't matter. Even if they are for 3 years, you can claim ITC only after the 3rd year.
But then the invoice is already issued.
Doesn't matter. That's the rule. That's the amendment.
No, but then like this 180 days of invoice, so should we like pay the tax before?
But then what will happen? The invoice will be also conditional, na? When I get the invoice from the supplier, I'll tell the supplier that issue me invoice as per installments. So I'll also make the payment as per installment.
Okay.
But even if invoice is in installment, payment is in installment, okay, still ITC cannot be claimed in installment.
Okay.
Okay, clear? Okay, next is that to claim ITC, another proof is that, and this proof has to be audited, right? Audited proof. Okay, another proof is that GST returns have to be filed before the due date. GST returns have to be filed before the due date. If GST returns are not filed, you cannot claim ITC, because then government will say you are claiming ITC, the audit has not yet been conducted, right? So GST returns have to be filed before due date to claim the ITC. Otherwise, you cannot claim ITC. Or you claim the ITC, and if you forget to file the returns, again the same thing, 18% interest. Understood point number 8? What is the due date? We'll see in the returns chapter. Huh? There is a chapter on returns of GST. In that chapter, we'll say what is the due date. Yes. Now, guys, pay attention. Huh? When there is a numerical question, these will be coming as adjustment, and then they will ask whether input tax can be claimed or not. So these are not just the conditions. These will be your adjustment in your examples. Okay, clear till here? Clear till point number 8?
Yes, sir.
Any doubt? Let me just check the chat also. No doubt in the chat. Okay. Now, point number 9 is again from the adjustment point of view. Let me write it first. I'll give an example first, and then we'll come back to the point. Huh? If depreciation is claimed on value of capital goods inclusive of GST, okay, then ITC cannot be claimed. Okay. And if you want to claim ITC, okay, then depreciation has to be calculated. Depreciation has to be calculated on value of capital goods exclusive of GST. I'll explain this with example. Exclusive of GST. Okay. So if depreciation is calculated, I'll write, if the depreciation is calculated on the value of capital goods inclusive of GST, then ITC cannot be claimed. Okay. And if you want to claim ITC, then you'll have to change your depreciation method. Okay. Then depreciation has to be calculated on the value of capital goods exclusive of GST. Let me give an example first. Then tell me if you understood or not. Okay. So let us say capital goods value was 11,80,000. That was 10 lakhs plus 18% GST. Right? 10 lakhs plus 18% GST means what? 1,18,000 ka GST, na? 1,18,000 ka GST. That's how this 11,80,000 was the value of the capital goods in my books of accounts. Okay. So the capital goods value in the balance sheet. Obviously, in the balance sheet, when I write capital goods, when I write the machinery value, I write machinery value inclusive of all taxes, na? Right? That is IAS 16, property, plant and equipment. Accounting rule. It's an accounting rule. Whenever you write the value in the balance sheet, you always write the value goods value plus all taxes, right? So now in the books of accounts, what will happen? In the books of accounts, the company has claimed, or the company has calculated depreciation at, let us say, 25% on 11,80,000. Okay, company has calculated depreciation at 25% on 11,80,000. Now what will happen? The input tax, the input GST. How much was the input GST? 1,18,000. Even though it's for furtherance of business, right? Even though it's for furtherance of business, okay, it will not be allowed as ITC. So government is saying either take depreciation ka benefit, either take the benefit of depreciation or take the benefit of input GST. You cannot get both benefits. So if you understood this, so if I want to claim this input GST of 1,18,000, right? So if company wants to claim input GST of 1,18,000, what should the company do? Company should calculate depreciation at 25% on which value? Tell me.
10 lakhs.
10 lakh value, na, on the value of 10 lakhs, right? On the value of 10 lakhs. Okay. So if you want to claim both depreciation and ITC, if you want to claim depreciation and ITC, then calculate depreciation on value exclusive of GST. So out of 11,80,000, value exclusive of GST was only 10 lakhs. Okay. So claim depreciation on 10 lakhs, right? And then you can claim entire input GST of 1,18,000 as your ITC. But if you are calculated depreciation on 11,80,000, okay, then entire ITC of 1,18,000 will be disallowed, will be a non-eligible input tax. See if this entire example is clear. Very important example, huh, guys? This is a very important example. How can we claim depreciation? Normal, na? When we claim depreciation in our books of accounts, what we do? Capital asset minus depreciation and P&L debit side. Okay. So while writing in P&L debit side, don't take depreciation as 25% on 11,80,000. Take depreciation as 25 lakhs on 10 lakhs. Okay. So depreciation will be not 11,80,000 into 25%. Depreciation will be only 10 lakhs into 25%. Okay. That will appear in P&L debit side. Okay. And this entire 1,18,000 ka benefit you can take in your GST returns. Okay. Doubt is, could you please explain again? Okay. See guys, this is a bit confusing. In this case, generally, how much depreciation I would have charged to P&L account? Depreciation charged to P&L account. How much this would have been in this case? Example is marked in red. The example is marked in red. So generally depreciation charge to P&L is how much? Value of capital goods into, let us say depreciation rate was 25%. Here I am giving capital goods depreciated at 25%. Okay. And the value in the balance sheet is 11,18,000. Or I'll write capital goods value is 11,18,000 and depreciation rate I'll write separately so that there is no confusion. Depreciation rate is 25%. This was the example. Marked in red is the example. Okay. So generally when I charge depreciation to P&L account, what do? The total capital value inclusive of all taxes, okay, into 25%, right? So this comes out to 11,80,000 into 25%. 2,95,000 is my depreciation amount as per IAS 16 property, plant and equipment. Understood till here? This is what I generally do. Understood till here? Yes or no? Okay. But if you do this, what happens? If the company does this, what happens? Company does not get to claim ITC of 1,18,000. Okay. So your input tax, even if you're paying GST of 1,18,000, you cannot claim it as input tax credit. You cannot claim it as ITC. That's the rule. Till here also understood now?
Yes, sir.
Okay. So now, so this is option one. Okay. Option two is what you can do. Calculate depreciation on value exclusive of GST. Exclude the GST value and calculate depreciation. So if I exclude GST value, what is the value of the goods now? Right? 10 lakhs into 25%. So 2,50,000 is the depreciation that I'll claim as per IAS 16. Okay, and now company also gets to claim ITC of 1,18,000. Obviously, which option will you choose?
ITC, the second one.
Second one, na, because here my net benefit is what? 2,95,000. Correct? And here my net benefit is what? 2,50,000 plus 1,18,000. So I'll obviously choose option number 2. Okay, so the next doubt is how claiming of both ITC and depreciation will be beneficial for government. It is not beneficial for government. It is a benefit that government gives to me, to the registered person, to the manufacturer. Government is giving this benefit that you can claim both depreciation and ITC. So it is a loss for the government. Okay. All right. Now this example is clear na, guys? Depreciation wala example. So option is with the manufacturer. You can do this. You can claim depreciation 2,95,000. Okay, but 1,18,000 cannot be deducted while paying tax to the government. Okay, otherwise claim lower depreciation. Claim a lower depreciation, and then you can get entire 1,18,000 ka tax benefit while paying output GST. Okay, so what happens here? If the depreciation rate is higher and GST rate is lower, people will go for option 1. Everyone agrees? If the depreciation rate is higher, let us say depreciation rate is 40%, 40%, and GST rate is only, let us say 9%, or let us say 8%. Correct? Then that time what happens? People will go for option 1. But otherwise, people will always choose option number 2. Okay, done. And then comes the most important condition. Clear till condition number 9, guys? All 9 conditions till now are clear? Yes or no?
Yes, sir.
Okay.
So,
Number,
sir, the rate of depreciation will be verified by the auditor?
Yes. And the rate of depreciation depends on the life of the asset, no?
Right.
If the asset has only life of 4 years, right, the maximum depreciation is what? 25%. Okay. So no doubt till point number 9, na, guys. All of these will be adjustments in your numericals, huh? All of these will be acting as adjustments in the numericals. They will give a lot of transactions, and they will ask you what is the eligible input tax. What is the eligible input tax? 10 to 12 marks question. Huh? All right. Now comes the important part. Condition number 10 is that input tax credit is by default blocked on certain transactions, like a negative list. Correct? So even though they will be for furtherance of business, tax invoice will be issued, all above 9 conditions will be satisfied. Huh? All above 9 conditions will be satisfied, but government is giving a list. ITC's default is by default blocked on certain transactions. That is list given by government. List given by government. Government says we are allowing you tax benefit. We are allowing you tax benefit, but on certain transactions, on certain, let us say, inputs, we are not giving you ITC, even though it was for furtherance of business. Okay. So this is under section 17, subsection 5, also known as blocked credit. Also known as blocked credit. This list you guys will have to remember a little bit. Okay, very easy this thing. Easy concepts are given in the list, but that is a list. Eventually that is a list that you guys will have to remember. Okay, let us look at this list now. All 10 conditions understood? Any doubt? Anyone has any doubt?
So this chapter is a bit confusing overall.
Because we have not yet started with the numericals. Na? When we start the numericals, it will start getting more clear. Like I said, ITC, I'll need 2 days to teach ITC. It cannot be taught in 1 day. So what you guys have to do, you have to see whether all 10 conditions are satisfied. So take individual transaction. Okay, just take one single transaction and see if all 10 conditions are satisfied or not. If one of the condition is not satisfied, that is not eligible for ITC. Okay, that input tax is not eligible, and remove from this 1,15,000 then. Okay, so for example, I have taken input services of carpenters. I have taken the input services of carpenters, right? But it has been given in installments and I have not yet received the last installment. Okay, then can I claim this?
No, sir.
Correct. So you have to read the conditions. You have to read the conditions at least 3-4 times, right? So today, what you guys will do? Today, you guys will read these conditions. Okay, I have clearly given all the conditions. I'm not going to give a separate chart for these conditions because I wanted to explain each condition one by one. All right, done. Let us look at the list. So I'll just insert the list from here only. Can you see the list in the Excel now?
Yes, sir.
Okay. So first one, if you have purchased motor vehicles for your business, can we have a 5-minute break? Then after 5-minute break, should we continue till 6 o'clock then, guys?
Yes, sir.
Chalega kya? No. Or will you guys read the list at home today? But I need to explain some things out of the list. I need to explain certain things out of the list. Take a 2-minute break, guys. Take a 2-minute break. Then we can start. We'll continue till 5:30 only. Can you continue tomorrow? Tomorrow, numericals we'll do tomorrow. Okay, numericals we will do tomorrow. Let us finish off the conditions today. Okay, we don't have numericals from blocked credit only theory. No, you will have it. Okay, because when you get a sum, for example, I'll just open a question. This is a typical question. This is a BCom level question. Okay, this is a question for ITC. See point number 3. Purchase of bus seating capacity is 15 persons for transportation of employees from their residence to company and back. Okay, is this allowed under ITC? Okay, so then what will happen? We'll have to see condition number 1. Motor vehicles for 13% and below is blocked, but 13% and above will be allowed. So motor vehicle for transportation of person. So bus purchased for transportation of employee having capacity of more than 15 persons is allowed. Okay, so in the ITC question, this will be there. Okay, so doubt is in college we haven't started with this chapter, and today sir said ITC isn't an important chapter for exam. He will share some few questions, just study those. So sir, do we need to study in this much detail? Now that is up to you. Okay, I will teach it. You guys decide whether you want to study or not.
So, can you just also explain the time of supply, the Bare Act?
Yes, like I said, I'll do that. Okay, time of supply, I'll do it.
Yes, sir.
Okay. Can you take tomorrow's class early, like in the afternoon, since it's Good Friday? What time tomorrow? What time should we take tomorrow, guys? Should we take earlier in the morning? If everyone is having a holiday, can we take around let us say 10 o'clock, 10 to 12? Is it okay?
No, sir. In the evening.
Okay. Will then if some people are having problem, we cannot do anything, or we'll have to stick to 4 to 6 wala timing, the pre-decided timing. Okay. we get up at 1. Who is this getting up at 1? Till 1, all my college lectures are finished till 1 o'clock. Almost all my college lectures are finished till 1 o'clock. Okay. Evening only will take. Okay. So let's not change the timing, because some of the students have problem with earlier timing. So we'll keep it 4 to 6 only. Yeah. We'll keep it 4 to 6 only. All right. Okay. The next doubt is, has the paper format been decided? No, they are still deciding on the paper format. Okay. That's why they are still deciding which questions to take, which questions not to take. Okay. So that's why we can't take the risk. Na? I'll teach whatever is there in your college syllabus. I'll teach it. Okay. How much to study is up to you and your teacher. Okay. Is that fair enough, guys? Whatever is there in your college syllabus, I'll be taking everything. Okay. We have enough time. In 20 hours, the college syllabus can be finished. Or do you want to only take those topics which your teacher will say, which your sir will say that these are only important, only that? Should we take only those then? You guys tell me.
So today our college has just started with ITC, just the explanation in brief. So he has not yet covered the sums.
Okay.
So we actually don't know what kind of sums we will get.
So that's why I said, see, the problem is, what if later on the college faculties amongst themselves say that no, we'll put the question on ITC, then what you'll do? You guys will do? Hai na? Okay. So teach us all, but later when it is decided, can you? Yes, that we can do. So someone is saying that teach us all things, but later on we can decide what is important. Yes, we can do that. And guys, see, what I'm thinking is, see if this makes sense to you guys. I think your IDT exam is on 5th, na? It's on 5th May, right? So what we can do on 4th May, we can have a 4 hours ka marathon batch, 4 hours marathon batch, where we will revise everything at once. Okay. And also we will focus on your important question and question bank. Hai na? So that now everyone is replying so quickly. First time I got so quick replies from everyone. Okay. And we'll try to take it offline. We'll try to take it offline so that I'll understand that where you guys are having problem with it. Is that okay? Marathon batch offline?
Yes, sir.
All right.
So online, sir.
Online it will be difficult to take 4 hours, and you guys will get bored online. You guys will get bored within 2 hours. You cannot sit even for 1.5 hours. You guys cannot sit even for 1.5 hours. How you guys are going to sit for 4 hours? That too 1 day before exam? I don't think so.
Offline, sir, offline.
Exactly. You guys will get bored, right? Online you guys will get bored. So
So
what we
but
can do is, what we can do is those who can't attend offline na, I'll audio record the entire session and I'll send it to you guys later on. All right.
Sir, actually on 4th we have an exam. So then
After
offline
your
means
exam,
where,
na?
sir? Place?
I have a class at Swargate. It is a class with around 50 students ka capacity. So apna kitna hai bachche aaye hain? 59, 60. Arey 61 students are there. I only have admissions of 55 students. Who are these 6 students who are attending without admission? Anyway, so we can manage up to 55 students we can manage, okay, in the class. The class is at Swargate. I hope you guys know where Swargate is. It's the middle of the city. So we can take it offline. All right. And those who can't attend offline, for them, I'll do audio recordings and we will send you. Okay. 15 minutes ka audio recording. Someone will send it. Okay. I must be logged in twice because I am outside and my laptop is on at home. Okay. No problem.
For approximately at what time will you keep the offline lecture?
So offline lecture, we will do one thing after your exam. Now 4th May, the exam ends at what time? 4th May exam will end at what time?
10:30 cleared over.
10:30. Na? So after that, have lunch and come na, in the afternoon. Then we'll sit for 4 to 5 hours. We'll cover everything because there are a lot of things to revise again. Na? There are so many limits and so many concepts, right? So it will take us at least 3 hours and then 1 hour for your question bank solving. Okay. Do you teach any other subjects? I teach a lot of subjects. I teach accounts, I teach financial management, I teach economics, taxes, costing. Okay. Chalo. So now let us get back to the list quickly, guys. Within 10 minutes, we can finish off the list. Within 8 minutes. Karne ka kya? We'll do it. Block credit. Now no one is saying yes. Okay. See, first time, what happens, first time when you study now, you find that this is too much to learn. Okay. That happens when you do it first time. When we revise this now, you guys will immediately recall it. I'm pretty sure that you guys will recall it when we revise it. Okay. So don't worry about how we are going to remember. That's why that marathon batch I'm planning, because that is needed for taxation. That is needed for taxation. Any kind of tax you study now, there are so many concepts in taxation that you cannot just learn it once and go for the exam. You have to revise it one more time. All right. Okay, chalo. Enough of discussion. Let us go on to do the list. All right. So blocked credit means what? These inputs or these capital goods or these input services have been purchased for business purpose, okay, for the furtherance of business, but still the input tax paid for them is by default not allowed. It is by default not allowed. Okay. So the first is very simple. Motor vehicles used for transportation of person with seating capacity of less than 13 persons, including driver. Okay. So in short, I'll say small cars, small buses not allowed. Okay. Big buses are allowed. So let us say I am Infosys company. I am an Infosys company and I am having a bus service for my employees. Okay. Small buses purchased and input tax paid on small buses is not allowed. Input tax paid on big buses is allowed. So what is a small bus, big bus? They have given the capacity. Capacity is less than 13 persons, not allowed. Capacity more than 13 persons is allowed. Easy to remember also. Say yes. Okay. Okay. So here I have written it. So ITC on motor vehicle for transportation of person with sitting capacity of more than 13 persons will be allowed. No problem. Will be allowed. Okay. Next. So now see, transportation of passengers. If it is a taxi business, then it is allowed. If it is a driving school, then motor vehicles is allowed. And if you are actually selling motor vehicles itself, your business is to sell motor vehicles, then all motor vehicles are allowed. So let us say example, if I'm myself in the business of purchasing, let us say spare parts, purchasing parts and assembling a motor vehicle and selling a motor vehicle, okay, then all kind of motor vehicles are allowed as ITC. Okay, so for sale of motor vehicle business, all motor vehicles allowed. For taxi business, so if you are into Ola, Uber business and you are purchasing a small car, it is allowed. If you are running a driving school and if you are purchasing a small car, it is allowed. Okay, but if you are not into these three businesses, right, if you are not into these three businesses, small cars ITC not allowed, small buses ITC not allowed, only big buses ITC allowed. See if this is clear now. So just remember, for these three businesses, all kind of motor vehicles ITC is allowed. Apart from these three businesses, only big buses ITC is allowed. That's it. That's the entire first condition done. All right. Same goes with, like, just like motor vehicles, same goes with aircrafts and vessels like ships, boats, etc. Exactly same concept, and there is no restriction of number of passengers over here. Okay, so for sale, right, for trading of aircraft and for transportation of passengers, if you are into these three businesses, then ITC is allowed on aircraft and vessels. Okay, but apart from that, ITC is not allowed on aircraft and vessels. Okay, so for example, if I am a airline industry, and I have purchased a plane, will I get ITC on that plane? Yes or no? If I am into airline industry,
Yes,
correct?
sir.
Yes, because that is what is my business. My business is transportation of passengers and goods, no? Correct? Then I'll get ITC. But if I'm a manufacturing company, and I have purchased a plane for travel of my board of directors, for business travel of my board of directors. If I'm a manufacturing company, manufacturing mobiles, okay, and I have purchased plane for the traveling business travel of my board of directors, will I get ITC? Yes or no? No, correct. In this case, I'll not get the ITC. Even if it is for furtherance of business, I will not get the ITC. So in both these cases, I'll repeat this again. This is very logical. In both cases, in case of motor vehicle, aircraft and vessels, you will get ITC only in three kind of businesses. Actually, you are into sale of these things, you are into business of transportation of passenger, or you are into training for such passenger. Okay, then only you will get ITC on these things, otherwise you will not get the ITC. Logical, na? So if you understood all these examples that I'm giving, all right, I think your this thing capacity is done for today. Then insurance, servicing, repair and maintenance relating to the above motor vehicle. If motor vehicle is not allowed, aircraft is not allowed, insurance, servicing and repairing of such motor vehicle and aircraft is also not allowed. Okay, so you don't even need to remember these. The third one you don't even need to remember. First two you guys need to remember. Huh? Okay. Third one is what? If the first two are not allowed, then insurance, service and repairing of the first two is also not allowed. Simple. So you just have to remember the first two. Okay. You just have to remember the first two till now. Fourth one, membership of club, health, fitness center and travel benefits are not allowed, even though if it is for business purpose. If you are taken membership, if you are taken corporate membership of a club and you are paying input GST on that, it is not allowed. Even though it is corporate membership, it is not allowed. Okay. Because that is not actually for furtherance of business. That is for luxury purpose. Okay. That is for the luxury purpose of your employees. So that will not be allowed. Similarly, food and beverages, outdoor service, health service, plastic surgery of your employees, leasing, renting or hiring motor vehicle, aircraft, vessels, again not allowed. Okay. So anything which is for the luxury of your employees or directors, it is simply disallowed. See if it is logical till here. Anything which is for luxury, travel, okay, club membership, health benefits, okay, all these things, even if it is for your employees and directors, it is still going to be disallowed. Huh? It is still going to be disallowed. Okay. Similarly, any contract services for construction of immovable property. If you are into immovable, if you are taking any, let us say, builder services for immovable property, that is also going to be disallowed. Okay. Then a person who is registered but falls under composition scheme, that we already seen yesterday. A person who is under composition scheme does not get ITC. A person who is NRTP, that also we have seen yesterday. NRTP is non-residential taxable person. He will not get ITC. Personal purpose, personal consumption, no ITC. That also we have seen. And goods which have lost, stolen, or destroyed means it is not in my possession. If it is not in my possession, I don't have the actual possession of goods, I will not get the ITC. Okay. How hard is this list, guys? It's not that difficult. Huh? The list is not that difficult. Let me delete the list and let me ask you guys now. ITC is by default block on certain transactions. You guys tell me one by one. What was the first one?
For motor vehicles less than 13.
Right, less than or equal to, less than or equal to 13 persons. Okay, it is completely blocked. It is completely blocked, not allowed. But it will be allowed for what three businesses?
Sale, driving school, and
Taxi business.
Right, and transportation. I'll say transportation business instead of taxi business. I'll say transportation business. Right, that will be what? That will, these three will be allowed. Correct. These three will be not blocked. Huh? The input tax paid on motor vehicle in case of these three will be allowed as ITC, but on this it will be blocked. Okay. B is what? Aircraft and vessels. Okay, irrespective of number of persons. Huh? Okay, irrespective of number of persons. Even if it is a big aircraft, it is still disallowed. Okay, and same exception. Simple. Third, what was the third one? Insurance, repair, servicing of the above two cases. Okay, if you have taken insurance of your motor vehicles, insurance of your plane, correct, repair service of your plane, okay, and you have paid input GST on that, that will also be disallowed. Okay, then next, tell me the next one. What all you guys can remember?
personal purpose.
Correct. Personal purpose, anything which is for personal purpose. So that is not for furtherance of business, disallowed. Okay. Person is registered, but what's the problem?
Health centers. Okay.
But it's in composition scheme. It's under composition scheme, but he is under composition scheme. We have seen that na last time. Under composition scheme, again disallowed. Same way, person is registered. Okay, but under NRTP, non-resident taxable person, again disallowed. Okay. Yes, right. And then any benefits that company is taking for its employees or directors, everything will be disallowed. Huh? Even though it is for employees and directors, it is not for personal purpose. It is for the mental health of your employees and directors. Okay. Still, it is going to be disallowed. Okay. So such as club membership, then health, whatever health services or whatever, etc. Understood? And then goods which are not in our possession, goods which are not in our possession, they can be either lost, damaged, stolen, doesn't matter. Government will say, you guys will unnecessarily claim ITC, na? You will say, I'm claiming ITC of 1 lakh rupees, but those goods are not in my possession because they are lost, they are damaged, they are stolen. Government will say, not our fault. If you don't have the possession of your goods, you cannot claim ITC. You cannot claim the ITC. Anything else remaining from our list? Just check.
So self-construction of immovable property.
Immovable property. That's it. So immovable property. Any services. So works contract service. That is, you are building. You are getting the building made from a builder. Okay. Work contract services or self construction services for immovable property, right? So you are getting the building constructed either by yourself or from outside. You are getting the building constructed either by yourself or from outside. Done. So I don't think this is that difficult to remember. Huh? I don't think this is that difficult to remember. Okay, so these are all my conditions. So if any of the condition is not satisfied, directly you will be denied ITC. So do one thing, guys. Today read this. Today revise this. Tomorrow we'll solve questions. Or should I give you the questions? You guys want to try it on your own? You guys want to try it on your own? 3 questions I'll give you. Okay, good. You guys will try it on your own. Very good, guys. Okay. So what I'll do, I'll share this Excel sheet in the group. Okay. I'll share this Excel sheet in the group. And what I'll do is I'll also give the 3 homework questions. You guys try it. Okay. See if it is logical. If not, I am going to solve all the 3 questions tomorrow in the class. Okay. I'm going to solve all the 3 questions tomorrow in the class. Okay.
So, can you please share the last class?
Yes. I'll share that also. So what I'll do, I'll prepare a Google Drive link today itself. I'll put all the charts, all the Excel sheets on the Google Drive, and I'll share the Google Drive link with you guys. I'll do that today only. Immediately after ending the meeting, I'll do that thing first. Okay. Sure. And what I'll also do is I'll put all the numerical questions in one folder on the Google Drive. So you guys can revise those questions in the end. All right, sure. I think enough for the day. that time of supply wala concept we can start with tomorrow. Bare Act, Nisi, we'll start tomorrow. Okay, I think people's attention span is done for now. All right. So tomorrow, first thing, remind me of that, and then we will do the questions. All right, chalo. So let's meet tomorrow 4 o'clock, na guys. Tomorrow 4 o'clock only.
Yes, sir.
Okay. I'll end the meeting then.
Thank you, sir.
Okay, no problem.